So the highest profit ever, 20 billion in inflows. Natural question is a very comfortable set of numbers for the market to absorb this morning. Where were the strongest inflows, and how is the client appetite for risk bearing up in the volatile start to the year? Good morning.
Good morning, Manus. Good to see you again. Yes, indeed, this was a record year for Julius Baer, and we're glad to post the highest profit ever. I think the clients have played a key role in this, in terms of their activity, their trust, our ability to generate value with them and revenues. And that's actually true for clients across the globe and all segments. And the same for net new money, where we had very strong inflows, again, across the entire networks with all regions contributing. I think this has been uniformly a very, very strong result on the client side. And obviously, the strategy implementation has helped, where we have been taking very consequent steps in the last 2 years to drive sustainable profit growth and to invest in our business. And we've kept ourselves safe and sound and added to our capital base. So I think this gives us a lot of confidence as we go into 22.
Now, obviously, the dividend is going to be taken well this morning, I'd say. But the buyback, 400 million in terms of a buyback, that's less than the previous buyback. My question to you is that a cautious approach to buyback? And are you building, as it were, the war chest for, as you call it, future opportunity? So just square away from me the lower buyback number relative to the last number that we had at 450.
Not cautious, but it's a conscious approach to manage our capital base. And we've said that many times, that we want to manage our capital over the cycle and make sure that we do not hurt excess capital. I think the increased dividend together with the share buyback allows us to do exactly that. When it comes to future growth perspectives, I do believe that such perspectives will open in the coming years. I also do believe that the markets will fully support us in realizing those objectives if and when they arise. And in that sense, we do not need to keep a war chest to make these things happen. The two things are not directly.
OK, that's interesting, Philipp, because to Manus's point, you say they're not directly linked, but there's a lot of focus on M&A in the sector, and in particular, digital robo-advisors being bought up by competition like JP Morgan and UBS. Are you interested in that sort of M&A deal at this point? Are you looking to do deals, bolt-on acquisitions perhaps in that space?
Again, I mean, we said growth is an important element of our business, and that's primarily for Julius Baer growth in our core business, in wealth management and in our core markets. That's where we've always been looking. Obviously, we have been extending our circles in concentric manners around our core business. And the recent, albeit small, acquisition of KMP in the area of real estate shows that we're also willing to expand our solution skills. And I'd look with the same lens, but also with the same weight of priorities into the future. It has to make sense at the end of the day for our clients, and it has to add synergistically to Julius Baer's business moving forward.
OK, Philipp, so you say expanding in concentric circles and it has to make sense logistically. Do you have any plans to re-enter the US market in a more meaningful way in the near future?
I think we're at this stage very happy with the geographic setup that we have, and we cover all time zones across the world, ranging from Brazil to Europe to Asia. And I think these core markets have given us ample growth and still offer us ample opportunities. We always are looking into other markets and what could and should we do. We're obviously looking at the very large wealth management markets, which include US and China, but we take a very cautious approach to them just because it has been so easy for foreign players actually to not make money in those markets and not add true value and create distinctive value propositions. Again, should the opportunity arise to position ourselves the right way, we should definitely do that. But right now, we're very busy with our growth path.
And that growth, just to give us a sense, comes from the clients, comes from the inflows, and comes from client activity. That's how you deliver the numbers. Yesterday, when I was with UBS, the biggest concern, I was quite surprised, was geopolitics, not inflation. When you talk to your high net worth clients, what are they most concerned about this year as we go into, we've been jolted into 2022, haven't we, Philipp? The prospect of 4 or 5 rate hikes. What is it that could hold the activity back this year?
I think right now there's a lot of complexity around, and in that sense also a lot of opportunity. Yes, all eyes are on the central banks and especially on the Fed, and how is it going to curb liquidity and tame inflation and avoid a recession at the same time. And I still find it interesting about how many rate hikes there is. The talk goes about if it's 2, 3, 4, 5. I've heard something like 7. I want to see the first and maybe the second play out and see how the market really reacts. And that will also be a good point for our clients to then position themselves in the right way. And yes, indeed, as you said, I think there is a lot to compound this. There's political uncertainty and everything that's going on in the world right now. There's still uncertainty from the diverging recovery paths post the pandemic that we're going to see over the next 1 to 2 years. So there are actually a lot of volatility drivers out there in the market. This is a year when advice is maybe even more needed, although I already said that last year.